Hey everybody, welcome to the morning market briefing. Hope you're doing well. It is Tuesday, January 31st, 2023, last day of the month. Lots to chat about, lots of earnings trickling through, all kinds of good stuff. Ben, where do we want to jump in, man?
Let's jump in on the employment cost index because we're just getting news on that, and it came in for the fourth quarter. So again, it's pretty delayed, but we're looking at growth of 1% on a year-over-year basis in Q4. On a quarter-over-quarter basis, 1%, which is down from the 1.2% in Q3, and it's similar to what we're seeing on some of the private data. The Paychex CEO was on CNBC this morning, and he was making the note that wage inflation has really come down and is now less than 3% at an annualized level in January. He said it's still relatively elevated in the 6 to 7% range in leisure and hospitality, but for the vast majority across sectors, significantly lower wage growth, and that should be positive for the Fed as we get ready for tomorrow and tomorrow's announcement from the Federal Reserve. But it also just speaks to the angst that people are seeing on the inflation side. We had data from Spain yesterday, data from France this morning, and I'm curious to see what Tom's thoughts are on this. But overall, it seems like inflation is coming down, but there are skittish investors right now, and I think this drove the market declines yesterday, who are concerned that inflation may pop up over the next couple of months. And I do have some sympathy with that argument, but I think the overarching trend is downward.
Yeah, the overarching trend seems to be favorable, but Spain came in, CPI came in at 5.8. Expectation was for something in the high 4% range. France came in at 7, which was a bit of an acceleration from the 6.7% they saw in December, but largely in line with the expectations. Germany has been delayed in terms of their CPI. That's going to come out on Friday after the ECB report on Wednesday. Tom, what are you seeing? What data is catching your eye ahead of the Fed?
Saying estimations in somewhere between 4.4 and 4.5%. The spread was exceptionally wide at this, but 3.8 to 6.5%. So they were pretty.
Tom, we're not getting it. I don't think anybody can hear Tom.
I heard over the wall what he was saying, and essentially what we're seeing is we are beginning to see some moderating inflation in Spain and France. It's just not happening as quickly as people would think. For example, in the month of January, the preliminary read was that on a month-over-month basis, prices actually fell. But did they fall as much as expected? No, but you're still in a deflationary environment in Spain, and I think that's good news. And I think that should be the bigger picture. And also we're getting news on rents, that rents are coming down as well. So I think you put that all together, and I think it's reasonably good news on the inflation front. The question is, how reactive will the Fed be to that, or will they wait the coming data? If I was them, I would hike by 25 basis points and say we could, at the next meeting, we could hike, we could do nothing, or we could cut. That's what I would say. I don't think they're going to say that, but I think that would be the appropriate monetary policy action.
Yeah, I kind of agree. I mean, in a way, that would be kind of in line with Tom's theory from last week. I think he shared. He was like, I really just think it's time for them to stop talking. You either don't talk or you give them every possible action and you imply massive amounts of agility. I think that would be relatively favorable. Meanwhile, the IMF has raised their growth outlook for GDP by 20 basis points to 2.9%. Really citing resiliency among the U.S. in terms of spending and China's reopening. Ben, are you surprised by that change?
No, because they're always about a year late, maybe 2. The IMF is potentially even worse than the World Bank, which is even worse than the Fed in forecasting where the economy is going. So I wouldn't even think about that.
We do have some company headlines in terms of Southwest and American Airlines having to cancel more flights, this time due to a winter storm sweeping through Texas. More than 1,600 flights canceled in the U.S. continued just challenges for several of the airlines. But I want to shift gears a little bit more towards earnings. Ben, we heard from quite a few companies. Busy week here on earnings and economic data combined. Take us on a tour on what you're seeing earnings-wise and what's standing out.
Yeah, I mean, I think you start off on a great spot with Southwest thing. I mean, you see these management teams that are not operating super well are seeing that their businesses are less resilient. We saw that with Southwest, obviously. Right now, we're seeing that with Samsung, which isn't cutting capex or production. We're also seeing that with Johnson & Johnson, who they were trying some clever stuff with their talc liabilities, and it doesn't seem like the legal authorities are going to go along with that. So Johnson & Johnson is going to have to figure out how to ring fence some of its talc related cancer liabilities. But in terms of earnings themselves, I think that the broad sense today should be that earnings are resilient. You're looking at UPS, which by my math, they're going to be down in volume in the mid to high single digits this year. They're going to offset some of that with pricing, but their margin degradation is not going to be as bad as I might have thought. But their overall picture from a GDP perspective is actually quite cautious. GM, a relatively similar boat. GM's earnings really holding up pretty strongly. All things considered, they're actually investing in a lithium mine in Nevada that's supposed to come online in the second half of 2026. We can talk a little bit more about my thoughts on that if you're curious. And then you have some of the pandemic beneficiaries, things like Pfizer, even Pulte Homes to an extent. They are kind of resilient, but not as strong. Pfizer is really hoping that COVID vaccine sales are going to reaccelerate. Right now, they expect that there'll be 65 million doses in 2023. That's down about a third from this last year. But they expect it to go back up to 98 million. So going from 65 million to 98 million by 2026, in part because they're going to combine it with the flu shot. So that's their strategy, but it's a huge margin product, and they're having a significant weakness on their earnings guidance as a result. Pulte Homes had new orders down 41%, but they're holding pricing up 17% for Pulte, which is a little bit distinct from D.R. Horton, but Pulte does serve a little bit of a higher end consumer. And then finally, I'll just talk a little bit about Caterpillar. Caterpillar continues to be resilient, especially on the resource industry side. They say the end user growth was driven by heavy construction in quarry and aggregates. So that's quite notable there. Pricing continues to go up for Caterpillar, although it's showing some signs of deceleration. It's still up in the mid-teens on a year-over-year basis, and then they're still getting volume growth as well. So Caterpillar definitely seeming more like a late cycle story, but holding up pretty well for now.
And interesting with ExxonMobil, we've talked a lot about the rhetoric coming from DC and the White House in particular as it relates to oil-related companies. Interesting note in their commentary where they said, quote, "While our results clearly benefited from a favorable market, the counter-cyclical investments we made before and during the pandemic provided the energy and products people needed as economies began recovering and supplies became tight. We leaned in when others leaned out." So an interesting defense of their company's performance and the value they bring within the economy, I think.
Yeah, definitely. I would definitely agree with that. Yeah, it's an interesting backdrop today in terms of coming into the day where expectations were, and these companies that are definitely seeing some signs of weakness and but are able to operate through it. I think they've really focused on getting lean, with some exceptions. Obviously, Samsung has not been lean. In fact, they continue to get bigger.
Yeah, Samsung going to keep capital spending essentially at the same level, continuing to really pour money in. Major contrast compared to others that we've seen in the chip space. Lam Research and others expecting as much as a 30% reduction in some spending. So no cut in utilization from Samsung, which is interesting. I mean, Samsung, I feel like they kind of have a history of going against the wave of popularity in terms of what they're doing and what they're producing.
Yeah, I mean they just they have such a diverse, wide-ranging business that they can afford to be very aggressive on the chip side in order to work down the growth curve and work down the cost curve, and that's just their strategy, and they seem content to be able to be willing to take losses in this environment, whereas some of their competitors like Micron is not. Micron is significantly cutting their production, and it's really to the benefit of Samsung. Micron is doing the right thing. When prices go down, you cut production, and Samsung is the beneficiary of that because Micron's doing all the heavy lifting.
Yep. Ben, you kind of teased this, but what are your thoughts on GM with the lithium plant investment?
I have a long and sordid history with Nevada mines. There was a gold company I once invested in called Allied Nevada. It was the biggest investment I ever made in my 401k at the time. I talked to the CEO. I for years. The guy ends up running off and starting a mine in Guyana, and anyway, the business was terrible. They were heap leaching gold, and the gold just wasn't there. The problem with building a mine in Nevada is that it's hundreds of miles from anywhere, and you have the trucking costs, and trucking lithium from one place to a place where you can move heavy material more efficiently is just it's extremely costly, and it's difficult, and building that mine is difficult, and finding labor is difficult. And I really think that to a large extent it's fool's gold. I've met the chairman of this company, Lithium Americas, actually a couple of years ago, and there was something off with him. I mean, I don't know what exactly it was, but he was not all there. We talked for about half an hour, and he was talking about his Argentina mine and how it's only 300 miles from the road, and how they're just going to build a road and they're just going to need a truck. I'm like, there's no way they're going to be able to do that. And so that's DOA right now. And so now they're hawking this Nevada project and selling it to GM, and Mary Barra. I think she's an excellent CEO, but she's fallen for this hook, line, and sinker, in my opinion. I think it's a very poor investment from GM. I would be shocked if they were delivering lithium in the second half of 2026. So, I mean, if anything, it'll be 2030, but I don't expect it to happen.
Yeah, interesting to see how that plays out. I mean, I feel like lithium's a top 10 question we get from clients in terms of, hey, have you ever looked at lithium? And we've frankly struggled to find an attractive play. There seems to be so many operational and governance concerns with most of those plays.
The money in lithium is made on the refining side, because you need a certain purity of lithium and the right type of lithium to be used in batteries. So you can have all the lithium in the world, but if it's not the right type of lithium, it doesn't really mean anything. So, I wouldn't be betting all of this on a project that is not even developed yet in Nevada, in the hopes that you'll secure supply. I mean, it fits with the GM story. They're betting everything on this, on the electric vehicles. They say 2023 is going to be the year of the Ultium platform, where it really accelerates, and they are producing more electric vehicles now. But this integrated strategy, just focus on building cars. In fact, focus on designing cars. That's where you should spend your time. Otherwise, you're just diluting what you do best, in my opinion.
Yeah, keep the main thing the main thing. We'll wrap it up there. We will be back tomorrow morning at 8:30, and we should be back in the studio here in the next day or two. And we will talk to you guys soon.